EIOPA performs regular stress tests to both the insurance and pension sector, and by doing that we complement our day-to-day supervision with additional insights on how these sectors perform under extra stress. This year we focused on the insurance sector and we tested how they would respond under the severe circumstances of a prolongation or even an escalation of geopolitical risks. We had 48 insurers participating, and I thank everyone for the effort made to contribute, because it brought us to 75% of the market covered in this stress test. Now the scenario we developed, and we did that together with the ESRB, is a very severe scenario, and it comes on top of everything insurers already have to do under normal supervision. But if we look at that scenario, what we did is we created a situation which is a hypothetical geopolitical escalation of risk that then results in disruptions of the supply chain that stifle growth and also add on an increased inflation in Europe. And we asked insurers to calibrate what that would do to them. Now, of course, this is definitely a tail event that results in market shocks, but in the test, the market shocks that followed were tight financing conditions, widening credit spreads, a steep inversion of the yield curve for government bonds, and concerns about sustainability of debt. And then to these shocks we added some insurance-specific shocks to see how insurers would deal with a jump in policy lapses, a rise of insurance claim inflation, as well as lower inflows from premium payments. Now, where does this bring us? What were the results? Well, I'm happy to say that our industry, the European insurance sector, is able to deal with these very severe shocks, plausible shocks, but very severe. Of course, it will have a drawback on liquid assets, it will have a drawback on capital, and that is why it is important to have prudent risk management, to have a reserve of liquid assets, and to have good supervision in place. It is also important to monitor how the sale of assets in a time where there is a look for liquidity is turning out and impacting the broader market. And we will. But if you want to know more on how we concluded that, on what were the detailed results, I recommend you to have a read of our report.